Brad Thomas here with The Street. I'm here today at RECon 2014, the Super Bowl for retail. I'm here today with Dan Hurwitz. Dan is the CEO of DDR Corporation. Dan, good to see you today.
Good to see you, Brad. Thank you.
Great. Dan, you had some really great earnings coming out first quarter. You had your FFO was up 3.7% year over year. Occupancy's up 95.1%. What's driving this company today in terms of your earnings?
Well, business is good, and what's really driving it all is demand for space. Our tenants continue to grab market share on a consistent basis. Nothing new is getting built. So what you own now is worth more than it is when there's competition for the space, which we don't have right now. The quality of the portfolio has gone up dramatically. And as a result, we have even surprised ourselves a little bit with some of the leasing velocity that we've had in the first quarter that often is slow. You know, first quarter, most tenants close in the first quarter, very few open. And leasing is sometimes a little fragmented based on what happened during the holiday season. And as you know, we had a pretty average or below average holiday season. So we were very, very pleased to have one of our highest leasing volume quarters in the past 19 quarters. And it's very unusual to have in the first quarter. So quality of space, the quality of our assets, tenant demand, the quality of the space is just driving the business.
Great. Let's talk about the evolution of DDR and specifically the transformation that we've seen in terms of the pruning of your portfolio. I know you sold a lot of assets, I think just under $200 million, I think, recently. So can you talk a little bit about that transformation?
Well, over the last several years, we've sold about $4 billion worth of assets. And, you know, we had to be honest with ourselves. We had to recognize the fact that we were spending an awful lot of capital, money and human capital, on assets that were of low quality. And assets that are of low quality are certainly more susceptible to the negative pressures of various cycles, and we had to do something about it, so we did.
Sure.
And we've had a very, very active capital recycling program. We've transformed that money into high quality prime power centers, and that's what's driving the business that we just talked about.
And some of that capital, I assume, has been to improve your balance sheet. Can you talk about some of your balance sheet improvements this year?
Well, we've significantly delevered the company over a series of years, and we're now at the point in time where because of our EBITDA growth, our debt to EBITDA levels are coming down. We're not at the point where we are selling assets just to delever the balance sheet or raising equity just to delever the balance sheet. But because of the growth of our assets and the growth of our company, we're on a natural progression downward on the leverage cycle, and that will continue for the next number of years.
Great. Finally, I want to talk a little bit about supply and demand and how you feel like that's, where are you in that cycle today, and how has that benefited DDR investor?
Well, demand is outstripping supply by many times. We have not seen a cycle like this in a very, very long time. So we don't believe it's going to change anytime soon. You know, people are talking about construction a little bit more, they're talking about development, but not really in our asset class. Our assets are big, our assets are expensive, they take a very sizable equity check today, and a lot of the private developers are still staying away from the big power centers. They're going more to the grocery-anchored neighborhood centers, which are more bite-sized than our product type. So even though you're seeing a little bit more construction, we're not seeing it in our product type at all, and we are not feeling any external pressure for the space that we're trying to lease, or the leverage that we have on the tenants today is maintained throughout the portfolio as a result.
Great. Well, Dan, thank you for your time today here at RECon.
Thank you.
Thank you. This is Brad Thomas here with The Street.